When price is pushing upwards, it moves in this path, making a series of higher lows and higher highs. This is when you know that price is pushing upwards. Then when it starts going down, you want to see it making a series of lower lows and lower highs. So when price is pushing down, going sideways, it makes what they call relatively equal highs and relatively equal lows. Take note of the word relatively. They are not exact. Most times they will not be exactly equal, but are still within the same range. That's why we call it relatively. So they are still within the same range. That's what you find in the market. So when you see price moving like this, making higher highs and higher lows, you want to only buy. And when you are buying, the principle of buying is that you must buy low, and the principle of selling is that you must sell high. What we refer to as low is this area. See, this is a low, that's where you should buy. This is a low, that's where you should buy. This is a low, that's where you should buy. This is a low, that's where you should buy. Now when you are selling, you want to sell high on top of this place here. That's where you want to sell. You want to sell at this high point. Now if you take a closer look also, we are going to see that the lows for this uptrend are somewhere close to this place. They occur after they must have broken the previous high. That is when they come back to print the low. These lows occur close to the previous high. You see, close to the previous high, that's where they occur. So basically, when they break the previous high, they will come back to retest it. When they break the previous high, they'll come back to retest it. That is what you will observe. When they break, come back to retest, break, come back to retest, break, come back to retest, just like that. The same thing with the lows. So when it breaks, it comes back to retest, breaks, it comes back to retest, and just like that. So this should be the guide. This should guide you in your trading. It should be your guide. Now, having understood that, let's go to the break and retest strategy. How the break and retest strategy works is that when price is pushing up, when price is pushing up this way, pushes up above a level. This is a key level, an imaginary key level. So when price breaks it, it comes back to this key level where it broke out of. And then what you want to do is you want to look for certain signs, certain bullish signs, something like this. Then you take a buy. When price pushes and breaks another key level, this is another key level, price breaks it, comes back to it, then you want to see that same sign, that kind of bullish confirmation, then you want to buy again. This is simply the break and retest strategy. Now here price breaks this level, comes again, drops again, comes here, retest, breaks it, comes back to retest, and just like that you sell. This is just how the break and retest strategy works. So for you to trade the break and retest strategy correctly and profitably, it becomes very, very important that you must understand your key levels. You must be able to identify your key levels, number one. Number two, you must be able to identify your the origin of price. Number three, you must be able to identify the market structure. And you must be able to identify pullbacks. You will know which one is pullback and which one is the correct move. Which one is a impulsive move. So we must be able to identify all these things, and that is what we want to do now. So how I do this is that I go to the daily time frame like this. This is also what we call top-down analysis. So you go to the daily time frame like this. I'm sure people can hear me.
Yes, we can hear you.
Okay, so I go to the daily time frame like this. As I come to the daily time frame like this, I identify the current price level. This is the current price level here, as you can see. So I just mark the high above it, and I mark the low below it. This is it. That's all I need. Can see? So that's all I need from the daily time frame. The next thing I want to do now is I go to the H4 time frame. I go to the H4 time frame. You don't need to do anything complicated, guys. Listen, you don't need to do anything complicated at all. The moment you start complicating the whole thing, that's when you begin to find it difficult. Okay, so now when I come to my H4, I want to do the same thing. I want to look for key levels and mark them. So see here, where I refer to as key level are those places where price have retested or have rejected before. You can see price tested here, price tested here, and here also, even here. So that's a very valid point for me. So I'll mark it again. You can see this. This is a key level for me. I'll mark it. This is another place here. So I'll also mark it. Price used there before now. That's it. So here also price used there before. So this is it. This is all I need. You can see, because the reason we mark this is that price like to repeat what it did previously. Whenever price gets to a place where it struggled to pass before, it likes to respect that place again. It is most likely to reverse from that point where it struggled earlier, or where it's even reversed from before. It is most likely to do the same thing there. So you take advantage of that vulnerability of price. So after this, I go to H1. I want to also mark it and do the same thing. Now on your H1, what you want to do is to either adjust the lines you have drawn before, or you draw a new one if there is need. If there is need to draw another one, you just draw it. But in a situation where there is no need, then you make use of the one you've already drawn. As we can see here, I think we might need to adjust this one. Yes, this one needs adjustment. Okay, so we have it here. It's okay now. Then I think the rest are okay. There's no point adjusting anything again. So these ones are okay, and we are good. We are good with our drawing. So this is just it. Now you have to go to your M30. Now on M30, there is nothing you are drawing again. You might not need to draw anything again. Now on your M30, what you want to do is that you want to look at the current price level and you ask yourself, where is price coming from at this moment? That is what you want to ask yourself. Where is price coming from at this moment? Now you can see This is where price is coming from, right? This is where price is coming from. Remember, this is the current price level, and this is where it's coming from. And this is your resistance. This is your resistance. So if price is coming from resistance, that means it's trending downwards. And so you should be looking for a sell. You should be looking for a sell opportunity. That's one thing. Another thing, there are different things you can apply here to see. You can also apply trend line. For instance, if you apply your trend line from here, you can see that we are pushing downwards. This is it. Look at this also. You can see now we already have a break of trend line. So here we should be looking for opportunity to sell. Had it been that we met price earlier here, we should have sold from this point down. But now, look at what we have here. Okay, so obviously you are looking for a sell opportunity. You have gotten your buyers. You see how easy it is. You have gotten your buyers. You are looking for a sell. You are no longer wondering what you are in the market to do. You are looking for a sell. Very easy. You are looking for a sell. You have this channel. Why I have broken out on the channel? Why I have broken below it. So you want to go to your M15. You are going down because you want to find sniper entry. You want to be able to enter at a point where we will not suffer much drawdown, because the fact that you have gotten your bias is not enough to make an entry. You can be right with your bias and still fail with your entry. Most traders even find it more difficult to get their entry than getting their bias. Some people always get their bias right. They predict their price will sell. But the problem is, where do I join the sell? And then they go and join at a point where price will reverse against them and go and hit their stop loss. And immediately price hits their stop loss, it will start going in their direction. And that is a huge problem, a very big problem for many people. It has happened to all of us, including me. So that is why we must fight the battle of getting the buyers, and also fight the one of getting the entry. When you win these two fights, the next one you want to fight is that of risk management. When you win that, the next one you want to fight is your trading psychology. These four things, if you have them, if you get them correctly, forget it. You are unstoppable. You become invincible when you get these four things right. Not that you will not lose again, though. You might still lose, but overall, you will be a winner. You will lose some trades, but the ones you are going to win, we cover up for the ones you lost, and will give you profits. That is how it is. So you must take care of understanding your bias, your trading bias, understanding your entry positions, your entry points, and then your risk management and your psychology. When you lose a trade, you will not, revenge. You will not start chasing trade. You will not begin to revenge the market. You will not try to take revenge on the market, because when you begin to try to take revenge on the market, you find yourself making silly mistakes, being very partial in your judgment of what price is doing, and that is a very wrong psychological state in the industry. Then when you take the market and you don't find any setup that is nice, you just walk away. That is another good psychology that you need to have. Okay, so here, this is M15. Basically, what you do on M15 is to read the market structure. That's what you do on M15. Now let's do a little of reading the market structure. So starting from here, you can see this is what you have here. You mark here, this is price is coming down here. So we have a low here and here. So price breaks the low, goes up, retests it, and drops again. So we have another low here. Price breaks it, goes up, retests it, and drops again. So we have another low here. Price has broken it. Didn't really go back to retest it. So we have another low here also and the high. So price broke this low, came back, retested it and dropped again. So we see we have a low here. So eventually price now pushed up, breaking this high. You see from this angle, from this area, initially, what price was doing is that it was only breaking the lows. It never broke the high at about this point. So what does that tell you? Somebody tell me. When you see this kind of thing, when you encounter this kind of scenario whereby price is only breaking the lows and never breaking the highs, what does it tell you?
Downtrend.
What?
It's a downtrend.
Okay, so when price is breaking the lows, what it tells you is that you are in a bearish market. You should only look for sell opportunities. You should only look for opportunities to go short. That is just it. So here price has been breaking the lows. So you should look for opportunity to sell. And you can see this was number one opportunity to sell, second opportunity, another opportunity, another opportunity, another opportunity. So you would have sold there and you'd have made your profit. Very, very simple and straightforward. After that, the next thing is that price came here and broke this high. So once price breaks a high like this, what do we call it, guys? Somebody tell me. Price has been in a downtrend, breaking the lows. Suddenly it goes back and breaks your high. What do we call that scenario, guys? What do we call it? What?
Break of structure.
Shift in market structure or change of character. Okay, yeah, somebody you're on point. Shift in market structure, change of character, or displacement. So that's correct. Whichever one you call it, depending on what you want to call it. Different people have different names for it. So I call it shift in market structure, change of character, displacement. It's all the same thing. So what we have here is change of character. That's what we have here, shift in market structure. This is it. So when you have it, price goes up again, comes back, can see retested here, pushes up again. So here you are now looking for opportunities to buy. Pushes up, came back, retested, went up again, broke this high, came back, retested. So at this point you are looking for opportunities to buy. You are not looking for opportunity to sell again. So this is one thing you see in the market. Now I want us to come to a point whereby we decide what we should do in this current setup that we have now. I want us to arrive at a point where we say, yes, from this analysis that we just made now, this is the current market condition now, and this is what we should be doing. Now you can see that at this point, price has been breaking the highs, breaking the highs, breaking the highs. And then at this point, price got to this level. This is our resistance level. Price consolidated here, this one consolidation. So that this resistance was able to hold price. So price dropped. Price dropped and came back and broke this low. You see that? This is very clear. Once you see this, you should be happy. You should be excited because it is an opportunity to sell. It is an opportunity to make free money. And I think I traded this very setup. Did I? Let me see. I think I traded this very one today. I think I posted it. Let me check. I think I did trade it, and that's this 101s. I don't know, but it seems I did. Yeah, this is it. This is VIX 101x. This is it. I actually traded it and I made some profits from it. It was very smooth, very nice. So this very move here. So I'm not even teaching you theory. I'm teaching you what I practice. Look at it. This very one. So as soon as I saw the price came down here, broke this low, that was my change of character. So I quickly marked here This is my point of interest. This is my point of interest. What I mean by point of interest is that it is the point whereby if price get to, I want to see price get to it, and then I will be comfortable to look for entry there. So that was it. I waited for price to get to it. At about this point, I didn't take the trade because I wanted to see a sweep of liquidity. So when price got here, it dropped, went up again, created this equal highs. I didn't join the market. I wanted to see price sweep liquidity, just as we got here, price swept it here. You see, this is where it swept liquidity by breaking this, by piercing through this guy here, piercing through these highs. Normally, at this point, somebody will take their trade. People will take their trade because here price has broken the low now. Here, so people will say, okay, let's use this other block. Let me go to M5 so that everything will be clearer. So having read the market structure on the 15 minutes time frame, we now know what we want to do. We now know what we should do, exactly what we should do. We know it. This is our area of interest here. I wanted price to come here, and then I will start looking for entry opportunities. So when price got here, eventually I wanted to see sweep of liquidity. I like to see it before taking trade most times. So I got it here. You can see, although we had a change of character here, but because there was no sweep of liquidity accompanied, I wasn't comfortable to enter it because most times it will go back and take you out and then start going in your direction. So I waited for price to sweep liquidity here. After price swept liquidity here, I waited for displacement. This was a displacement here, which got change of character. So price now pulled back. As soon as price went back and gave me this this down candle, this bearish candle here, as you can see, this bearish candle here, I took my trade. It dropped, went back again, and then continued dropping. I actually exited somewhere here. I left this very low. That was what I used. This low. I used this low as my exit point. A little bit below it. Somewhere here. That was where I exited the market. See, that was where my take profit actually was. I think this is it. This 9304. 9304. This is exactly where I placed this stuff. 9304. That's where my take profit was. And then you can see it was very smooth. So this is how we do it in the market. There is no magic at all. You have to mark your key levels, identify where price is coming from, and then read the market structure. Then look for your entry. I look for my entries at M5 and M1. That's where I look for my entry confirmation. So on my M5, I saw this sweep of liquidity, displacement here, and then boom, I entered the market. Very easy, very, very simple. So I want you guys to go and backtest this thing I've taught you now. Go and backtest it on your chart, forward test it, and see how that it really works. Then apply risk management. First of all, trade it on demo account first, master it, and then go to your live account and use it to trade. So this is actually what we do on our VIP mentorship. I guide people from time over and over again until they master it, and then sometimes too we find setup like this and we trade it live. We've done that before. So that's just how it is. So let me recap. Number one thing, you go to your the first thing you do is go to your daily time frame, mark the key levels, like the high, the most recent high. That's what you should mark. Then the most recent low, That's what you should mark on your daily time frame. Then after that, you go to your 4 hours time frame, mark the key levels you find, close to, excuse me, the key levels you find close to current price level, mark them. Then after that, you go to your H1, and then look and see if there is any other key levels you should mark them. If there are none, then adjust the other ones you marked earlier, adjust them properly. That's what you should do, adjust them properly. And then after that, you go to your M30, go to your 30 minutes time frame. When you go to your 30 minutes time frame, you want to now create your narrative. Where is price coming from? Where is it coming from? Is it coming from the high? Or is it coming from the low? Okay, price is coming from the high currently. Where is it now? Okay, it has come close to a low, which means it has to bounce. It has to bounce, go up again, and then before start coming down again. So you say, okay, that's good. Now, if it's coming from since it's coming from a high, from the higher side, that means it's going to be going down. And if it's going down, that means you need to be selling. So with that, you already know that you want to only look for opportunity to sell. You don't have any business with buying. In this kind of market, you don't have any business with buying. You only have business with selling. So you now go to your 15 minutes time frame. You want to go and read the market structure. You go to your 15 minutes time frame and read the market structure. What is price doing? Okay, it's creating higher highs here and higher lows, which means you should buy. You should be buying. Okay, at this point it has broken the low, which is a change of character. So you now need to this from here to here is a structure that you have. So now you need to look for an area of interest. And how do you find your area of interest? You use your order block or fair value gap. So or breaker block. So in this case, what we have is order block. We have another block. So that's what I used. In some situations, I use breaker block. What I use. What I hardly use, I can't remember myself using the fair value gap. I've never entered the trade because it was a fair value gap. Instead, if I say fair value gap and close to another block, for instance, I see that there is a fair value gap close to my other block. I take 50% of the fair value gap, add it together with my other block, and then that is it. I use that point as my entry or point of interest. So, but to use only fair value gap, I don't know how to do that one, because to me, whenever I look at the markets, everywhere I'll be seeing fair value gap, so it gets me confused. So I don't like, using it. Like now, you see fair value gap here. Look there, you see everywhere you look, you see fair value gap, fair value gap. So which one is price going to respect? You don't know. So that's why I don't like. I've never entered the trade using only fair value gap. See, fair value gap is everywhere in the market. So for me, I don't like that kind of confusion. It's everywhere in the market. So I don't like. I've never entered the trade using fair value gap. I must. It's sincere, but it is important that you also take notice of it when you see it. Fair value gap, breaker block, another block. That's it. So you know that's your area of interest. Then you now go to your M5 or M1 to wait for your entry confirmation. What do I use as my entry confirmation? When I see price struggling at the point, when price pulls back and begin to struggle at the point, that's okay. The same price wants to drop. So when I now see it give me this kind of bearish candlestick here, this is what we call bearish engulfing pattern. This bearish engulfing pattern, when I see it, it's time to enter. I just swipe my sell button and sell. That's just how I do it. So it's as simple as that. It's not complicated. All right. I hope that is very, very clear.
Yes, it is very clear, sir. Thank you very much.
All right. So, is there any question? Any question or observation from this is how we do it, and this is what our VIP mentorship looks like. We teach you using pre-recorded video, and we also teach you live. So if you like it and you want to join our mentorship, feel free to do so. I assure you, in the space of 1 month, continuous attendance and continuous practice, in the space of 1 month, you should be able to, grab what you need to become, profitable. This is our mentorship group. You should be able to grab, you see, it's a mentorship group. We have opportunity to even comment and air your view. So, in the space of 1 month, you should be able to grab enough information to begin to trade profitably. If you stay committed to what we are teaching you. So, that is just it. Remember, this is the alpha trade, and we always believe that it can only get better. It can never get worse. Instead, it can get better. That's my personal belief, and I'm sure it's the same for you guys. Things will only get better. No matter what you are going through today, it might be having losing streak. You are not the only one. You are not alone. We all have that time where we lose. But as long as you know that you are doing the right thing, believe me, it will get better. You will not lose always. One day will be your lucky day, and you recover all your losses. All right. So thank you for attending. God bless you.